What if I told you the most celebrated tool in modern finance was once a felony? For decades, using company funds to artificially inflate your stock price wasn't a strategy. It was a crime. Executives faced handcuffs. Today, that very act is the cornerstone of corporate America. We're talking about stock buybacks, a simple maneuver where a corporation purchases its own shares from the market. This doesn't create a new factory, a new drug, or a single job. Yet it moves trillions. It dictates CEO pay, dictates market health, and has reshaped our entire economy. So how did this stunning reversal happen? The most dangerous magic is the kind we call legal. The tale starts not with a boom, but with a devastating bust. The 1920s were a carnival of speculation. Markets were playgrounds for the wealthy, where insiders pulled strings and fortunes vanished by morning. A common trick? Companies would tap their own treasuries to buy shares, propping up the price. It was a confidence game. Then 1929 arrived. The house of cards tumbled. Those same companies, desperate for cash, were forced to dump their holdings, accelerating the freefall. The Great Depression wasn't just an economic collapse. It was a collapse of faith. In the ashes, a new resolve was born. The Roosevelt administration declared war on market manipulation. The Securities Act of 1934 established the SEC. The message was clear. The market must reflect real value, not fabricated numbers. For the next 50 years, what we now call buybacks was effectively forbidden. Corporate profits were funneled into expansion, innovation, and payroll. The economy was built on tangible things. But then, a new philosophy began to whisper from the halls of academia. The sole purpose of a business, they argued, is to maximize shareholder value. This was a revolution in a spreadsheet. CEOs were no longer just captains of industry. They were servants to the stock ticker. The stage was set for a monumental shift. In 1982, with little fanfare, the SEC introduced Rule 10b-18. This single regulation created a safe harbor, shielding companies from manipulation charges if they repurchased shares within certain bounds. There was no national debate, just a quiet rule change that would echo for generations. Overnight, a forbidden practice became a standard tool. The floodgates opened. A trickle of buybacks became a torrent. By the 1990s, it was hundreds of billions. By the 2010s, it surpassed $1 trillion annually. The mechanics are brutally simple. A company reduces the number of its outstanding shares. Even if total profit stays flat, earnings per share magically rise. The stock price follows. Executive bonuses tied to that price explode. It's financial engineering at its most potent. Is this growth, or just a sophisticated mirage? This new alchemy transformed corporate priorities. The 2000s saw tech giants, once pioneers, using buybacks to offset stock-based compensation. They were using company money to inflate the value of their own pay packages. Then came the 2008 financial meltdown. The banks we, the public, rescued, took that lifeline and used subsequent profits, and often massive debt, to buy back their own stock. From 2009 to 2019, S&P 500 firms spent over $6 trillion on buybacks. That's more than they invested in their own future. What happens when a nation stops building and starts polishing? The consequences are a silent erosion. Research and development budgets shrank. Wage growth for the average worker stalled. Corporate debt skyrocketed as companies borrowed cheap money not to innovate, but to inflate. The wealth transfer has been historic and profoundly unequal. We traded workshops for share shops. The top 10% of households, who own the vast majority of stocks, captured nearly all these gains. The system became self-cannibalizing. Companies weren't building value, they were mining it from their own foundations. When the pandemic struck, many of these leveraged corporations, their resilience hollowed out, had to turn and ask the government for another handout. We now face a market that is addicted to its own reflection. We've replaced the slow, hard work of creation with the swift, elegant trick of financial optics. We outlawed this behavior after one catastrophe, only to re-legalize it and build another one. The cycle is complete. The greatest trick the system ever pulled was convincing us that the illusion was real. If this made you question the foundations of our economy, then hit the like button and follow Winds of Thought for more deep dives. The truth is often hidden in the patterns we ignore.